Types, methods, and techniques of money laundering. There are several methods that smugglers and money launderers use to perform the crime of money laundering without bringing it to the attention of any anti-money laundering authorities. The methods and techniques include 1. Smurfing or structuring. Often known as smurfing, this is a method of placement whereby cash is broken into smaller deposits of money used to defeat suspicion of money laundering and to avoid anti-money laundering reporting requirements. A subcomponent of this is to use smaller amounts of cash to purchase bearer instruments, such as money orders, and then ultimately deposit those, again in small amounts. 2. Hundi. Hundi is a major channel of money laundering in Pakistan. Overseas nationals send remittances to their relatives and friends through Hundi. It works as a credit transfer or IOU and transfers money without actually moving it from one region to another. You give the money to a Hundi agent, and they can provide you the similar amount in your destination country. Allegedly, some foreign exchange companies use this process to hide their taxable earnings from the government. 3. Physical bulk cash smuggling. Physical bulk cash smuggling involves transferring cash to another jurisdiction and depositing it in a financial institution, such as an offshore bank, with greater bank secrecy or less rigorous money laundering enforcement. Number 4. Cash-intensive businesses. In this method, a business typically expected to receive a large proportion of its revenue as cash uses its accounts to deposit criminally derived cash. Such enterprises often operate openly and in doing so generate cash revenue from incidental legitimate business in addition to the illicit cash. In such cases, the business will usually claim all cash received as legitimate earnings. Service businesses are best suited to this method, as such enterprises have little or no variable costs and/or a large ratio between revenue and variable costs, which makes it difficult to detect discrepancies between revenues and costs. Examples are parking structures, strip clubs, tanning salons, car washes, arcades, bars, restaurants, and casinos. 5. Trade-based money laundering. Sophisticated criminal acts often use trade-based money laundering, which can also involve trade misinvoicing, to move large quantities of illicit money between countries. By commingling the proceeds of crime with the proceeds of legitimate business, launderers are able to disguise the ultimate source of the illicit money. For example, in the Lebanese-Canadian bank case, an international drug money laundering operation with ties to Hezbollah commingled the revenues from used car sales in Europe with cocaine sales in Africa. This method is one of the newest and most complex forms of money laundering. This involves under or overvaluing invoices to disguise the movement of money. For example, the art market has often been accused of being an ideal vehicle for money laundering due to several unique aspects of art, such as the subjective value of artworks, as well as the secrecy of auction houses about the identity of the buyer and seller. 6. Shell companies and trusts. Trusts and shell companies disguise the true owners of money. Trusts and corporate vehicles, depending on the jurisdiction, need not disclose their true owner, sometimes referred to by the slang term strawman, though that term usually refers to a person acting as the fictitious owner rather than the business entity. 7. Round tripping. Here, money is deposited in a controlled foreign corporation offshore, preferably in a tax haven where minimal records are kept, and then shipped back as a foreign direct investment, exempt from taxation. A variant on this is to transfer money to a law firm or similar organization as funds on account of fees, then to cancel the retainer and, when the money is remitted, represent the received funds as a legacy under a will or proceeds of litigation. 8. Bank capture. In this case, money launderers or criminals buy a controlling interest in a bank, preferably in a jurisdiction with weak money laundering controls, and then move money through the bank without scrutiny. 9. Casinos. In this method, an individual walks into a casino and buys chips with illicit cash. The individual will then play for a relatively short time. When the person cashes in the chips, they will expect to take payment in a check, or at least get a receipt so they can claim the proceeds as gambling winnings. 10. Gambling. Money is spent on gambling, preferably on high-odds games. One way to minimize risk with this method is to bet on every possible outcome of some event that has many possible outcomes, so no outcome have short odds, and the bettor will lose only the vigorish, and will have one or more winning bets that can be shown as the source of money. The losing bets will remain hidden. 11. Fake salaries. Dirty money might be used to pay fake salaries. A company may have unregistered employees without written contracts and pay them cash. 12. Tax amnesties. For example, types, methods, and techniques of money laundering. There are several methods that smugglers 12. Tax amnesties. For example, those that legalize unreported assets and cash in tax havens. 13. Transaction laundering. Transaction laundering is a growing problem. 12. Tax amnesties. For example, those that legalize unreported assets and cash in tax havens. 13. Transaction laundering. Transaction laundering is a growing problem